Wow, Lulu, I think you getting into AI is cool, but robotics, isn't that just a little too far?
Time to buy, Lulu.
Are you sure it's safe?
Of course it is, Guru.
It's Thursday, February 5th, 2026 in the garage, and I know exactly why you're here. You woke up this morning, checked your phone, and watched $800 billion disappear from the crypto market cap. You saw Bitcoin go from 88,000 to 64,000. You saw Ethereum lose a third of its value in 48 hours. You saw Solana get cut in half, and now you're sitting there asking the same question everyone else is asking. What the hell just happened? And more importantly, is it over? I'm going to answer both of those questions tonight. Not with hopium, not with copium, with mechanics, because this wasn't random. This wasn't the market being crazy. This was an engine failure. And I'm about to show you exactly which parts broke, which parts bent, and what has to happen before this thing starts again. So if you want the truth, the real truth, smash the like, hit the follow, subscribe right now. Let me start with the headline everyone is running. Crypto crashes on fear. Wrong. Fear didn't crash this market. Plumbing crashed this market. Let me put this in garage language. Imagine you've got a high-performance engine. It's been running hot for months. Turbocharged, overclocked, pushed to the red line. Now imagine three things happen at the same time. 1, someone drains the oil. 2, the cooling system fails. 3, the transmission locks up. What happens? The engine doesn't just overheat, it seizes. Metal on metal, catastrophic failure. That's what happened to crypto in the last 72 hours. Let me break down the 3 failures. Failure number 1, the oil drain. The Federal Reserve just nominated Kevin Warsh to replace Powell. If you don't know who Warsh is, let me translate. Warsh is monetary discipline. Warsh is no more free money. The era of gentle money is over, and the market heard that loud and clear. The dollar surged 2.6%. The 10-year yield hit 4.27%, and every asset that was built on cheap liquidity started to suffocate. That's the oil drain. The lubrication that kept the system running smoothly, gone. Failure number 2, the cooling system. Remember the RRP, the reverse repo facility? That was the Fed's shock absorber. As of this week, that buffer is down to 1 billion, essentially zero. So when the stress came, there was nothing to absorb it. The heat went straight into the engine. Failure number 3, the transmission, dealer gamma. This is the part nobody on mainstream financial media will ever explain. When Bitcoin was above 88,000, dealers were in positive gamma. That means when price dropped, they were forced buyers. They stabilized the market. When Bitcoin broke 88, then 80, gamma flipped. Now dealers are in negative gamma. That means when price drops, they're forced sellers. They amplify. So every leg down triggered more selling from the very institutions that are supposed to provide liquidity. The transmission locked up and the whole engine seized. Now here's the damage report. $7 billion in leveraged longs liquidated, 335,000 accounts wiped out. ETF outflows hit 545 million on Tuesday alone. And here's the part that should scare you. BlackRock led the exit. BlackRock pulled 373 million in one day. This wasn't retail panic, this was institutional capitulation. The institutional adoption equals permanent bid thesis. It just got stress tested, and it failed. Now let me show you what this looks like on the charts. Lulu, our head of technical analysis here in the garage, handed me her report. And it's ugly, but it's clear. Bitcoin, we're sitting at 64,000. If we lose 63,000, that's the Binance reserve cost level. We're looking at a move toward 55 to 60,000. If we can reclaim 80,000 on a daily close, that's when gamma flips positive again. Between here and there, chop, fake outs, pain. Ethereum sitting at 1893. Lulu's levels are simple. If we lose 1770, we're looking at a move toward 1500. That's the 2023 range. If we can reclaim 2700 with volume, that confirms risk appetite is returning. Until then, structure is broken, not damaged, broken. Solana, $76 and change. This one got absolutely destroyed, down from 112. Lulu flagged $70 as the critical support. If we can reclaim 85 and hold it, shorts start getting squeezed because funding is deeply negative. There's a spring-loaded setup here, but the spring only works if the floor holds. Now, full disclosure, Lulu is a pig. Literally, she's a mini pig. And she's been more accurate than half the humans on crypto Twitter. So when Lulu says the structure is damaged, I listen. Now let me answer the question everyone is really asking. Is it over? Here's the honest answer. I don't know. And neither does anyone else. I can tell you what the conditions are that would signal it's over. And right now, those conditions are not met. Condition 1, funding rates. Right now, funding is still positive. That means there are still more longs than shorts. The leverage flush is incomplete. At a true bottom, funding goes negative. Condition 2, ETFs flows. We need to see outflows decelerate below 200 million a day. If we get another 500 million plus day, the institutional thesis is in serious trouble. Watch February 6th through 10th. Condition 3, dollar strength. The DXY is ripping. As long as the dollar keeps strengthening, risk assets are swimming against the current. We need a reversal below 97 to get risk on commission. Condition 4, gamma flip. We need Bitcoin sustained above 76 to 80,000 for dealers to do so. Until that happens, every bounce gets sold. So when someone asks, is it over? Tell them the conditions aren't met yet. That's not bearish. That's not bullish. That's just reading the gauges. Now here's what didn't break, because this matters. DeFi Core infrastructure, Avi down 4.5%, Lido down 7%, but utilization is still healthy. No liquidation cascade, the system absorbed an $800 billion market cap loss without structural. Stablecoin supply, 265 billion. Stable, not fleeing. That's dry powder sitting on the sidelines. Capital exited leverage. Capital did not exit the ecosystem. Bitcoin exchange reserves. 2.47 million Bitcoin cycle lows. Supply scarcity is real. It just doesn't matter when demand collapses. Supply scarcity needs a demand floor to activate. AI infrastructure spending. This is the part nobody's connecting. The Warsh nomination and tech earnings failures are what triggered this. Alphabet missed. Qualcomm missed. ARM missed. 200 billion from Amazon. 180 billion from Google. 125 billion from Meta. 105 billion from Microsoft. That spending is real. But in a rising cost of capital environment which Warsh represents, future returns get discounted harder. So AI infrastructure is intact, but the trade is broken for now. Now let me give you the trap. The 5 mistakes smart people are about to make. Trap 1. Bottom calling because fear is at 13. The fear and greed index is at 13. Extreme fear. Historically, that's where bottoms form. But here's the problem. In an indifference regime where the market isn't panicking, it's just absent. Extreme fear can persist for weeks. Panic recovers fast. Indifference drifts. And right now, the bid is just gone. Trap 2. Buying the dip because whales are accumulating. Yes, whales are absorbing Bitcoin. Yes, MicroStrategy signaled more buys. But here's the math. ETF outflows are 500 million a day. Whale absorption is a fraction of that. Until ETF flows stabilize, whale accumulation is getting run over by institutional redemption. Trap 3. Rotating into AI winners. G-Unit, our tech and AI scanning system, scores AI infrastructure at 85 out of 100. The spending is real, but the software index is down 7 straight sessions. Amazon dropped 7% after announcing 200 billion in AI spending. The market doesn't care that you're building. The market cares that you're not earning yet. In a Warsh regime, future earnings get punished. Trap 4. Confusing a relief bounce for a regime shift. After a 44% drop, any 5 to 10% bounce is going to feel like the bottom is in. But remember, dealer gamma is still negative. We already saw a failed bounce at 78,000. Dealers sold it. In negative gamma, rallies get sold until gamma flips. And gamma doesn't flip until it's sustained above 80,000. Trap 5. Scaling risk before liquidity repairs. Stablecoin supply is stable. DeFi didn't break. It feels like the system is ready to go again. But the Fed balance sheet is shrinking. The TGA is at 923 billion, draining reserves. The RRP buffer is gone. You cannot build positions in a contracting liquidity regime. The tide is going out. Don't swim against it. Now here's what I need you to internalize. The market does not need another shock to go lower. In an indifference regime, the absence of buyers is the selling pressure. No headline news. Just the slow drift of a market waiting for a reason to care. So what do? Protect capital. Wait for the conditions, not the price, the conditions. Negative funding, neutral ETF flows, gamma flip positive, liquidity inflection. Until those conditions are met, every bounce is a sell. Every narrative is noise. Here's the timeline that matters. February 6th through 10th, ETF daily flows. If they stabilize, a bottom is forming. If they exceed negative 1 billion for the week, extended pain. February 7th through 14th, Bitcoin 62 to 63,000 test. If we break that, we're in 2017 to 2018 bear market territory. Next 7 days, DeFi TVL 95 billion threshold. If it holds, the system is resilient. If it breaks, impatient. By March 31st, the Japan SBI RLUSD. The XRP thesis lives or dies. Here's how I want you to drive this. ETF flows are your oil pressure, funding rates are your coolant temp, dealer gamma is your transmission, EXY is your headwind. Right now, oil pressure is dropping, coolant is low, transmission is locked, and you're driving into a headwind. You don't floor it in those conditions. You pull into the pit, you check the gauges. You wait for the engine to stabilize before you push again, because here's what I know for sure. Supply scarcity is real. Stablecoin dry powder is real. AI infrastructure spending is real. These are not going away, but they don't matter today. They matter when the conditions repair, and when they do, the move will be violent, because thin order books work both ways. So if you're still here, you're garage game. You don't panic, you don't cope, you don't catch knives, you read the gauges, you wait for the conditions, and when the conditions say go, you go hard. I'm Avatar John. This is Guru Crypto Garage. The engine sees, we diagnosed it, now we wait for the parts. Smash the like, hit the follow, subscribe, share this with someone who's panicking right now. Because we don't do hopium, we don't do copium, we do mechanics. Seatbelts on, hands steady, eyes on the gauges, engine hot, safety off, let it rip.